Investors, there is no shortage of stupid people in the world. Unfortunately, a couple of those stupid people have infected our community. This could be on the Reddit forums. This could be on the Discord servers. It could even be in my own YouTube comments. That's why today we will be talking about the 5 biggest investing sins that income investors are making as told by your Uncle Cody. Take some notes. It's better to learn from other people's mistakes than lose that money yourself. Now, what are some of these idiotic comments that I hear so often? The first one is that this is free money. No, it's not. We will talk about that later. We also hear about income. I'm just investing for income. Income. As we will see, there's better things to invest in than just investing for income. These people are taking loans against their house. Guys, I am convinced if these losers could take a loan against their children, they would. Like, if they could say, hey, Susie, you're our firstborn, but dang old Yield Max, it's giving out 50% yields. We have to use you as collateral. So not only are they taking a loan against their house, they're also taking a loan against children. And then there's always the I'm going to retire by December talk. And it's always the end of the year, regardless of the time that they actually start investing. Like, even in January, they'll say, yeah, I'm going to retire by December. But also in May, they'll also say, hey, I'm going to retire by December. Like, it always has to be the end of the year. Like, it's never like, oh, the strategy might work so well that we're actually retire by Thanksgiving. And of course, every experienced investor knows that there is no risk involved in the stock market. Just absolutely no risk. Like, if you want to put in all your money on Tesla cars flying to the moon one day, there's apparently no risk. So just put all your money into it. And this is exactly the face they make while they say all this. All right, so the first investing sin is stop chasing these ridiculously high yields. Just like you don't chase after the girl with the biggest butt or the guy who's 6'5", looks can definitely be deceiving. So many popular funds, they're advertising 50 to 70% yields. Does that really sound right to you? Like Apple, the most profitable company in the world, largest company in the world, they're giving around a 1% dividend yield. Didn't they know they could give away a 70% yield all this time? Like, they could still be the most profitable company in the world even if they give away all their profits. Does that sound right to you? The S&P 500 typically returns only 7 to 10% every single year. That's if you take historical data from the past 80 plus years, the average is around that range. So if you're getting 10 times the average, you're certainly taking on a lot of risk, and you have to really question if that's sustainable. And no, you did not find some sort of cheat code. You did not find some way to cheat the system. You did not find a way to become smarter than Wall Street. People on Wall Street are spending billions and billions of dollars on the most sophisticated technology. They're doing 24/7 research on these companies. A lot of them, they might even be doing investor trading. Do you really think that you have found the magic beans investment that can give these imaginary 70% yields every year, while the rest of the market is lucky to break that 7 to 10% mark? You are not going to retire off a $100,000 portfolio. I don't care if you think you're getting a 70% yield and you're just going to retire after reaching a magical 6-figure number. That's not realistic. Your cash flow is not going to hit $10,000 once you reach $200,000. It's just not realistic. There's going to be a correlation between risk and reward. And just because there's high risk, which a lot of these income ETFs are, that doesn't necessarily mean they're high reward either. That's why 99% of people, they're just better off investing in a broad-based S&P 500 index fund like VU. But of course, these high yield warriors will say investing in VU, that just makes no sense. They'll also just write off like actually high yielding dividend stocks. Like, these income ETFs have totally warped people's actual minds on what is high yield these days. So some people will now say a 4% dividend yield is too low. Oh my gosh. People have so much to learn. I found in my personal experience, the best income ETFs are the ones that trade in that 7 to 14% range. That's that kind of magic sweet spot. Anything else is generally just a falling knife, though there are some exceptions, like some ETFs that have done pretty well been around for a little bit now, is SVOLV. And then FETB is still relatively new, but it's also been trading pretty well. And then we have some other popular ones that have done very well, like QQQI and SPY by Neos. They've maintained that NAV. They paid out some juicy dividends and even some capital appreciation. All right, let's move on to the second investing sin, and that is not caring about the NAV, the net asset value. No. These guys don't care about NAV. The only thing they care about is cash flow. And they never say cash flow, right? They never say cash flow. It's always cash flow. They always add like an extra link to that O. And that, I don't know why, but that just like kind of makes me a little angry. Like, stop enunciating it like that. So I absolutely love this argument because I don't care if the share price goes down as long as I'm getting that cash flow. Guys, where do you think cash flow comes from? It's going to come directly from the NAV. So the more the NAV goes down, the less cash flow you're going to be getting. They'll say things like, we only care about income. Guys, caring about income means you're caring about the NAV. There's going to be a correlation there. What don't you understand about this? Dividends don't just grow on trees. A falling NAV or a falling net asset value over a period of time, that generally indicates the value of the fund's underlying assets are declining. They'll say things like expense ratio. Oh, that does not matter. No matter. In addition, they say things like dividends are way more important than NAV. Who needs NAV? Guys, a fund having a negative NAV is often indication of poor fund performance. The fund manager's investment decisions might not be yielding positive results. This could be because they have those high expense fees, and remember, that gets taken out of the NAV. That gets taken out whether or not they actually make any money. And the lower the NAV, the lower the distributions are. Take a look at an ETF like Tesla, right? The distributions started off really high. Then the NAV kept declining and declining, so they now have less money to do options trading on, so thus there's going to be less in dividends. Yet people will still say silly things like reverse stock splits are good. No, they are not good. Reverse stock splits are not a good thing. Before we get to the third investing sin, make sure you join the Discord in the link below. This is a great community that you can use to talk to other like-minded investors. I also just started an investing sins channel, so in there we're going to be talking about silly posts that we see in the investing community, and then we're going to learn from that, so you don't end up in a box one day like the future home of another income ETF YouTuber. All right, guys, the third investing sin is young people are chasing yield and not growth. Young investors generally have a longer investment horizon, and they can afford to take on more risk. Growth-oriented investments such as stocks of emerging companies, they might offer a higher long-term return compared to those that are just income-focused investments. So a lot of people, I think the allure is that they just want to retire. Like, life is super hard, and I'm with you. It's definitely very hard, but there is no shortcuts in life. There's no shortcuts to getting rich. And that's where they kind of suck you in. They're like, if you come join our community, invest in these products, we're going to let you retire by the time you're 23. We will magically erase all your student loan debt, and inflation is not a thing if you're with us. They'll again say they only care about income. Income that is often taxed. All those gains Microsoft's had the past couple years, well, the only time you'll really be paying taxes on them in a taxable account is when you sell. But the dividends that it's paid out, those are taxable. They'll say things like, okay, boomer, even though they might be boomers themselves. Doesn't matter what generation you are, there's a lot of dumb people and they're making dumb financial decisions. Again, you also have to keep in mind the opportunity cost if you are a younger investor. So by focusing on income ETFs, a younger investor, they're going to miss out on higher growth opportunities that can better capitalize in the long term. Now, I've personally beaten the S&P 500 over the last 3 years because I invested heavily in companies like NVIDIA years ago. NVIDIA shares only give out 4 cents in dividends, but they've returned almost 2,500% in the last 5 years. That's more than income ETFs probably would have returned in a lifetime. But hey, we're not all robots, and I totally understand that. That's why I personally own a couple income ETFs in my portfolio despite being a younger investor. It's a nice way to see that dividends are coming in like clockwork, and it's certainly possible to have a balanced, best of both worlds approach. Wealth preservation versus wealth accumulation. This is a serious question people need to ask. Income ETFs are generally for those in the wealth preservation mode of life. They've already made their money. They're already either really close to retirement or in retirement. They don't need any additional ways to grow their wealth. They just want to preserve it. It's not wealth accumulation mode of life. That's where a lot of younger investors are. We're still trying to kind of get rich, have financial security for our children, for our family members. That's what we're really chasing. And you just really have to wonder, what are we doing if we're under 50 years old? If we're years away from retiring, what are we doing investing in a lot of these funds? All right, investing SID number 4, and I see this all the time, and then I always cringe. It's calling it free money and not understanding the risks. Anyone who claims that dividends are free money, they have absolutely zero brain cells. They have no idea what they're talking about. They will call it a money printer. And even though money printers do exist in real life, and the US government has one, that doesn't mean they're sharing that with you. In fact, they're taking money from you. They have found the ultimate hack in life. You have not. Dividends are a way for companies to share their profits with shareholders. When a company pays a dividend, it reduces its retained earnings, which are funds that could otherwise be reinvested in the business or to promote growth. Plus, anytime a dividend is paid, the share price is going to drop by the amount of the dividend. That's just simply how the stock market works. There's also always going to be an inherent risk to investing. Nobody is just going to give you money for free. That's not how the real world works. Even Bernie Sanders or AOC, they would tell you that. Maybe not AOC. People will also say taxes, they don't matter. The taxes on dividends, they don't matter. Rock and roll forever, right? Like return on capital, yeah, it could be used very efficiently. It can sometimes be a great thing, but it's not a forever strategy. And taxes will eventually matter. And then, of course, even though all the risks are outlined in the prospectus, all the risks that are heavily outlined, a lot of these investors, they don't know what a prospectus is. With a lot of these income ETFs, you really have to know the risks. You have to go and read the fine print that's listed on their websites, on their documents. It's not that hard to see that they can't produce a lot of juicy dividends without risk. And that doesn't mean that these income ETFs can't be profitable. There's going to be times where they might even outpace the market. But over long periods of time, that likely won't be the case. All right, and then the fifth and last investing sin is past performance is not indicative of future performance. One thing that I find so hilarious is that certain individuals in the community will see the projected dividend income and they'll think that's guaranteed income for the rest of their life, for the rest of eternity. Like, you think people can't seriously believe this? Like, what do they think the word projected or estimate means? Like, it clearly says projected. It doesn't say surefire dividend, fire emoji, income for the rest of your life meter, right? There's no guarantees with dividend investing. They'll say this is projected dividend income. They'll say things like the fund has existed for 63 whole days and they paid me dividends once, so I will put my whole life savings and children's children onto this fund. Just because a stock or ETF has done well or they've even paid out dividends for a long time, I'm talking a long time, that doesn't necessarily mean they will continue to do so in the future. Just because LeBron James has been a great basketball player for the last 20 years, that doesn't necessarily mean he's going to be great next year or make his next shot. The company 3M has consecutive increasing dividends for 64 straight years, but they actually just cut their dividend this past year. 64 straight years where they increased it, and now it's over. Nothing in life is guaranteed. Also, options income is so variable. It's not possible at all to guess what future dividend payments might be. Nobody knows what volatility will be in the future. That makes no sense. Income ETFs today are not going to pay the same amount of dividends that they do tomorrow, that they do next month, or the last month before that. There's no way to estimate that. Yet people will look at a projected dividend graph and think, look at all this free money coming my way. they're gonna pay for my Lambos. Yeah, right. Good luck with that Prius. Guys, make sure you join the Discord. I'm sure a lot of you disagree with what I said, but I'd love to hear your opinions. Let me know in the comments below. If this video made you smile, if it made you sad, if it made you laugh, I want to hear it in the comments below. Let's all be on this investing journey together, guys. The whole point of this is to learn. It's not to make fun of people. It's to grow. It's to become better investors. It's to provide for our family, to get financial freedom. Guys, subscribe to the channel, like the video. I'll see you on the next one, and I'll talk to you on Discord.